You're watching today's video technical update presented by FX Times. It is Thursday, May 6th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Risk aversion continues to grip the markets. Let's take a look at the Euro-Dollar, Dollar-Japanese Yen, and the Dollar-Swiss franc pairs. This video is being produced at about 2:40 p.m. Eastern Time ahead of today's US session close. Here's a look at the monthly Euro-Dollar pair. Have to jump to the monthly to see the bigger picture here, and we haven't had 1 month of positive euro-dollar performance. It's all been part of this precipitous slide. At the moment, a swing projection would bring us to 1.14, 1.13 area. 1.14, excuse me. But we see some support approaching at the moment. 1.2450 area, this previous low. This is a cluster of 50% Fibonacci ratio as well, so it could actually go down to 1.2330 area. Anyway, we are right on top of that. Well, actually, a couple hundred pips, but with the acceleration we've seen in the market, it's not that far away till this first support. Then we have another support here at around 119 area, 118 area, which used to be the resistance here to 1998. Again here, 2003, and then here to 2004, 2006. They were support. So 1.18, 1.19 area is the next resistance after 1.24. After that, the swing projection would go to 1.14 area, 1.14, 1.1450 area to the next cluster, 61.8% retracement, 138.2% expanded retracement of this rally, and also the swing projection. So that's the those are the three support areas coming up, and you would only see that in the monthly. And if you look at our charts, for example, it looks like a waterfall. So looking at the Euro-Dollar, we see a swing projection with a couple of support areas that the market may have a little bounce from. And when the market does bounce, look for quick topping action, not a big retracement, because the faster the market moves, the quicker the retracements should occur. Okay. The dollar-yen's rally was capped off this week, and there was a very precipitous slide due to risk aversion, and we see this double top action here. What was important is the 60 level in the RSI holding. You see, I mentioned, I was very bullish on this pair, but there was one reservation, which is that the market did not have momentum to break 60 yet, so we couldn't really have an outlook. We had intermediate targets at 108, 111, or 101, and not 108, but 98 and 101. But these targets have not been reached because of the risk aversion in today's market. So the market looks to be continuing its consolidation. So I would just treat this as a neutral mode at the moment. Okay, so now looking at the daily, let's switch to the daily time frame. We can anticipate some kind of support areas. Let's say this one, for example, we had a rally and the retracement, 200% retracement. Really, when you have a double top breakdown like this, one thing you can do for a minimal pattern projection is to just simply take the height or the width of this double top projected down here, and this is your 100% projection of this of this slide here. So you have another slide. So when the market tests 88, 88.20, look to see if the market could support it there. At the moment, I would anticipate the dollar-yen to be in sideways action. So basically, for the bullish outlook to come back, simply the market has to break above this consolidation top at around 95 area. So that's the new resistance for bullish outlook. However, the market is at the moment very bearish in the short term, and in the intermediate term continues to consolidate. Next, we are looking at the dollar Swiss franc. You see, in risk aversion, dollar Swiss franc continues to rally. So this is the Swiss franc pair is very weak at the moment. Here we have the equality broken. This was our projection to 1.11 or 1.10. I'm sorry, 1.11. Yeah, 1.11 area. But the market continued and rallied above that. Here we are. We basically are in a bullish range. So what we could have is a minor retracement. Look for a retracement, but look for it to find support in this previous resistance area. You see here at 1.09 there was resistance. Here again 1.09. So if the market comes down and this resistance zone becomes support, look for the market to continue rallying. Maybe we need to look at the weekly time frame to see where it could continue rallying. As you see, we are testing this 200 week moving average. Market looks like it's going into overbought territory, but that's a good sign for the bullish, as a bullish confirmation. So the next resistance, if the market breaks this moving average, is the 1.15 area, which is the 78.6% retracement area. You can also use different techniques to find a target. For example, you could project this projection right here. Oh, that's the actual projection that's being reached at the moment. You can extend this middle wave. Let's see. So if we have 161.8% extension of this wave, then we would go to 116 area. So I would be a little bit conservative and look for market to top off around 115, 116 area, not so much 116.80 as this indicates. One thing about the dollar Swiss franc pair, it's one of those, it's supposed to go up with risk appetite. Risk aversion is supposed to keep it pressured. At the moment, however, there's risk aversion, and but the dollar Swiss franc continues to rally. However, you can't ignore the fact that this pair is in long term still in a bearish mode. This 50 moving average is under the 200. So again, that's why I was a bit conservative on the bullish outlook towards 116, 1.15 area. Okay? And that's all for today. Visit FX Times and make sure to register for daily newsletters and invitations to live events. Once again, I'm Fan Yang, your technical analyst here at fxtimes.com, wishing you good trading.